Hello, everyone, and welcome to our monthly webinar. My name is Justin Cooper. I am a hard money lender and a full-time real estate investor. Each month, we bring in some of our friends in the industry to share their expertise. This may be through a presentation, like when we talk about self-directed IRAs or title insurance, or we may simply interview our expert friends and dive deep into how they got started, where their investing has taken them, and what they see coming, both for themselves and for the industry. This webinar is brought to you by Pine Financial Group. Pine Financial is Colorado and Minnesota's premier hard money lender. Pine focuses on the needs of Colorado and Minnesota real estate investors. We are investors ourselves. We know what it takes to get deals closed. Everyone at Pine Financial Group is dedicated to the success of its clients. We only experience success when our clients are succeeding, so we have a habit of telling you when a deal should or should not be done. And isn't that what you want from a professional in the industry, especially someone that you trust as an advisor? You will benefit from our honesty and integrity when you choose to work with us. Now, today's webinar brings in a special guest, Pine Financial's founder, Kevin Amolsch. Kevin formed Pine Financial in October 2008 after leaving a small mortgage company as a senior loan officer for the residential lending. Kevin has a degree in finance, which he obtained after serving 4 years in the U.S. Army. Kevin started out in banking, working at First Bank in the lending department while in school. From there, he started his first real estate investment company, which is still active today. He and his companies have closed on over 1,300 transactions as a buyer, seller, or private money lender. Kevin and Pine Financial Group have access to over $65 million in private equity, and the business continues to see strong growth. After college, Kevin spent 2 years working on Wall Street as a mortgage bond analyst before leaving to work as a loan officer with real estate investors full-time. He spent more than 14 years as a real estate investor and 10 years in real estate lending. He's the author of The 45-Day Investor, a frequent speaker, and has been quoted in the Las Vegas Review-Journal, the Denver Post, Yahoo Real Estate, and several smaller publications and blogs. Kevin, I've told the listeners just a little bit about you. Why don't you give one little insight into who you are before you dive into the presentation?
Yeah, Justin, I got to first say I appreciate you putting on these webinars for the company every single month. I've gotten great feedback time and time again, and so I'm excited that you invited me to finally join you for one of these things. I think we're going to have a great time.
Yeah, I'm excited as well.
Yeah, I don't know what else to add to the awesome bio that you have there. The topic of the webinar this month is how to raise $500,000 in 20 days or less. As you stated, I started Pine Financial Group. Pine Financial is debt-free, 100% debt-free, meaning all of the money that we have access to, all of the money that we loan out to our real estate investor clients has been privately raised. And you mentioned 65 million. That number is a tad higher now, so we're just over $70 million in private capital. So I have got a little bit of experience in raising private money. So should we just dive right in here, Justin, or is there anything you want to say before we get going?
No, I think we're ready. Let's go for it.
Okay, so this is my first slide here, which I guess we don't really need to spend much time on. I was telling you about myself. That's me and my 2 girls there. I'm a proud single father. Also the author of The 45-Day Investor, which is a book that I'm pretty proud of. You can get it on Amazon for, I think it's $8 for the Kindle. It's 45dayinvestor.com. And the book basically is just it started out as my bio, and it turned into more of a how-to book. So how I was able to buy properties time and time again, more than one every single month, using none of my own capital. All right, let's get going. So if you haven't yet, take out your pens, get out your notepad, because you're going to want to take some notes here. And if you stick around to the end of the webinar, I'm going to offer a free gift. Would that be okay, Justin, if I do that?
I think you should, absolutely.
Okay, so everyone is stick around with us as we work our way through this presentation. So we're going to talk today about how to stay safe from your regulators. We're going to talk about 3 simple ways to raise private money. I'm going to keep the presentation real simple, and I want it to be very much attainable for all of our listeners. 5 steps to yes. This is going to be the 5-step sales process to get your potential private money lenders or your private equity folks to say yes to your offer. And then we're going to talk about the paperwork, what's required or what you're going to want to do when you're bringing in private capital. And then finally, hard money and why it's essential to supplement your business. We are hard money lenders, so I have to throw that slide in there, right? Okay, before I get into this, I probably should do this quick disclaimer. Justin, I want everyone to know that you and me, neither one of us are attorneys, and nothing in this presentation is legal advice. Legal advice very much depends on the specific facts and circumstances of each individual situation. So anyone seeking legal advice, please do so from an attorney, not from Justin, not from myself, not from anybody at Pine Financial Group. All right, how to stay safe from regulators. You know, when we're talking about raising private capital, Justin, you know as well as I do that this is considered a security. And I think a lot of people miss that. In fact, when I was studying for my securities license and they were defining what a security was, first of all, they teach you the best way to understand what a security is to consider everything a security with very few exceptions. So it's easier to study what's not a security than what is. But the definition that I read, and this comes from the state of Colorado's website, a promissory note, which is the primary instrument we're using when we're raising private money, the promissory note is in the definition of a security. So I want to be very, very clear that we are talking about securities here. And whenever you're talking about that, there's some regulation, some licensing, and some bonding, and all these different things that could come into play. Okay, when I started back in 2006 raising private capital, I think I've shared this story with you before, Justin. I was working with a lady named Susan, and Susan, I owe her a great deal. She really taught me this business. She took me on her wing and she got me going. And she didn't really understand the business. Over time, I was raising money for her company and loaning it out. And I caught the attention of some of our competitors. We were about $3 million at the time. And again, this was back in 2006. And we're out there loaning money to real estate investors. And one of the competitors called me and he says, so you understand, Kevin, that this is regulated and you need to have a securities license to do what you're doing. Not a mortgage broker license, but a securities license. And he says, don't you think that test was pretty hard to pass? And I was like, oh, shoot. Yeah, that test, that was a tough one. Hold on, I'll call you back. Click, hang up the phone. Went to Susan, was like, do I need a securities license to be doing this? And she's like, oh, he's crazy that you don't need that. So I didn't necessarily believe her, and I wanted to find out for myself. So what did I do to find out if I needed a securities license to do what I was doing, which was basically brokering private money? Well, I called DORA. In Colorado, it's DORA, Department of Regulatory Agencies. Each state has its own regulatory department. And I called Dora, and a nice lady, Cheryl, works in the securities division. Cheryl Lemon was her name. And Cheryl says, oh, I explained to her what I was doing, the business I was running, and I asked her if I needed to be licensed to do it. And she says, Kevin, I'd like to extend an invite to you to come into our office. So there I am sitting in the office. And Justin, have you ever seen that show, Donald Trump's old show, The Apprentice?
Oh, yeah.
So, you know, in the boardroom, and they have that giant table that's like 2 rooms long.
Yep.
Well, that's what it was in Cheryl's office, this giant boardroom table. And she says, I want you to sit down right here in this chair. And it's right on the chair right next to the very head of the table. She sits on the other side of the table and she just sits there and doesn't say a word. It's complete silence. And I'm trying to make small talk, trying to figure out what's going on. She's not giving away anything. She's being very controlled, let's say. She wasn't saying really anything. In walks this gentleman. He was about 6'4" and 250, huge guy. He's got his badge hanging from his belt and his gun and everything else. And he throws his business card in front of me before he sits down. He says, Kevin, I'm investigator, whatever his name was. I can't remember. He says, you're under investigation.
Oh, no.
I was like, oh, shoot. Are you serious? What is going on? I called you asking you if I need to be licensed to do what I'm doing, and now I'm under investigation. So they went through a full-on investigation of my business, everything from every single loan I've originated, every single investor I've talked to or worked with. They went back 10 years in my history, criminal background checks, and all of this stuff to make sure that I wasn't hurting anybody, right? That's the whole idea, is they want to protect the consumer. And it turns out that I was actually disclosing to my investors much more than the state required. I was doing everything correctly, with the exception of not having the license, which I didn't know I needed. So they did require that I shut down lending until I got my license, but they let me get my license and continue the business. So I share this story with you and our listeners so that we can all understand the importance of doing things correctly. Okay, so stay safe from regulators. The easiest way to get into trouble when it's talking about selling securities is to advertise. There's two exceptions to this rule, and it's not for the beginning investors. One of them is a private placement memorandum, which falls under 506C. Most people are not going to have any idea what that was. You can Google it if you like. But what that says is as long as you only advertise to and only accept investments from accredited investors, then they allow you to do some advertising. So you can advertise directly to the accredited investors. But there's a whole bunch of regulations around that. The other exception is through a Regulation A, and that's more like a full-on public offering. If you get a Regulation A approved with the Securities and Exchange Commission, then you can literally be listed on a stock exchange, and you're a public offering at that point. So you can advertise. You could say, like, Pine Financial has a Regulation A that was approved a little over a year ago. So we could say, hey, we can take your investment and we could promise you an 8% return. We're allowed to do that because we got that Regulation A approved. Now, without those two exceptions, if you advertise, you are breaking the law. So the way you have to raise your private money is through your private network, which we're going to talk much more about that here today. Don't promise anything. Now we could say we're promising an 8% return because we're signing promissory notes. Okay, but what you don't want to do is, if you're not actually promising anything, don't use that word promise, and don't use the word guarantee. You hear a lot of people say, hey, I'm going to guarantee a payment for you. I'm going to guarantee a specific return, 10, 12%. And any kind of guarantee or promise like that is a big no-no in the eyes of the regulators. Okay, you don't want to compare it to other types of investments. One thing I learned dealing with the state of Colorado was they hate it when you try to sell your security by comparing it to something that's super safe, like federally insured, FDIC insured, for example. So if you're going to compare a private investment into your real estate fix and flip, for example, and you're going to compare it to a CD, well, your investor might be getting a 1% return if they're lucky, right? A 1% return in their CD. And you can offer them, twice that or 3 times that and get them 3%. But that's not really a fair comparison, is it, Justin?
No, definitely not.
No, because the fix and flip loan is not as secure as a CD insured by the government. Now, I can make a pretty strong argument that FDI, there's not nearly enough insurance to insure all these bank deposits. So there actually isn't a lot of insurance when it comes to putting money in the bank. But the perception is that you're protected by the U.S. government, right? So they're going to say it's much safer than something that's secured by real estate, for example. I think it's important that you qualify your investor. So with this Regulation A, we don't have these strict guidelines as we did before. Some of our other offerings, we had to qualify our investor, get them to fill out a questionnaire disclosing to us whether they're accredited or non-accredited, and whether they're sophisticated or non-sophisticated. And if you're a newer investor, or even an experienced investor that's not pooling money, you're just doing one individual deal with the individual investors, I highly recommend that you qualify your investor. Have them fill out a questionnaire. Have them tell you what their net worth is and what their sophistication level is. That could be as simple as, give me a little bit of a background on your experience analyzing this type of deal. And if you don't have experience analyzing these deals, who do you have that can look at this for you so that you can make a quality decision for you and your family? And then if you have them fill that out and sign it, and then I would stick to maybe 10, 15-ish% of somebody's net worth into your deal. If you start taking too much of somebody's net worth, it can almost be viewed as taking advantage of somebody. Now, is that a SEC rule or a state guideline? It's not. There is no rule that says I can only accept so much of somebody's net worth. I just think that's good practice. And then finally, it's disclose, disclose, disclose. Sometimes in sales, whether it's selling doodads or selling houses or bringing in private money, it's easy as a salesperson to not disclose certain items that could potentially impact the sale. I would strongly encourage everyone to disclose everything, even if it has a chance of risking the deal. There's no quicker way to trouble than to try to conceal something from your investor. Well, I guess that wasn't finally. This one's finally. Check with local authorities or attorneys. And I should redo this slide, honestly, Justin, because of the story I just shared with you. I would not check with authorities if I were you. Authorities are against you. They're not trying to help you. Trust me, based on my experience, who is trying to help you is someone that you're going to pay. They're going to be on your side and your team, and that would be a securities attorney. So if any of our listeners are looking for a good securities attorney, we could recommend someone to you. So just leave us a comment in the comments below. And I don't know if I don't think you shared this at the very beginning, but you and I had actually not you, it was me. I had something come up where I was not able to do the webinar live this month like we do every single month. So we're going to be posting this at our normal monthly time, but we're going to be posting it on YouTube. And so there's not going to be a live question and answer with this. So I encourage anyone that's watching this webinar now to please ask your questions in the comments below. And I promise I'll respond to every single question. If your question is a referral for a securities attorney, please leave that below and I'll respond to that. Okay, your 4 most likely lenders. Now, this is not your 4 best lenders, okay? I'm learning this as I try to decrease my cost of capital in my own business. These are the people that it's going to be easiest to raise money from. So this is who I would focus on as I'm building my business. And the first one is the people who know you. Whenever you start a business, any kind of business, network marketing, real estate agent, mortgage broker, insurance, any of these service related companies, you'll learn that you want to go after your sphere of influence first. Those are the most likely people to do business with you, and it's true. The problem with this, I mean, I don't know if I want to say a problem. My problem with this is money is so emotional. People are really impacted by the power of money. And if something goes wrong, it could create a big, big problem. Thanksgiving can get weird, right? If you're borrowing money from your family. For me, I really wanted to build my track record first and make sure I understood the business fully and then I could communicate that to my family and I could absolutely 100% keep everybody's money safe. So I was not comfortable raising money from my family first. What I wanted to do was go out and find more sophisticated investors and raise money from them, build up my track record, and then approach my family. And that's how I chose to do it. Now, that's not necessarily the easiest way. That was just my own personal comfort. But absolutely, people that know you will be the most likely to want to work with you. Let's face it, people work with people that they know, like, and trust. And so your sphere of influence is going to be your easiest way. The second are people who were referred to you. I guess in the business Pine Financial is in, and you could share with me your experience on loaning the money out, Justin. But as far as the bringing the money in, nobody's easier to close than someone that was referred to us. And we get a ton of referrals because we don't do anything we don't say we're going to do. We're absolutely 100% transparent. We deliver on our promise, and people really like us. We don't have any negative feedback on any of the websites, Facebook, BBB, what else is there, Yelp, any of that stuff. It's all positive. And so we get a lot of referrals and people want to work with us. Now, when I get a referral in, sometimes I don't even need to give them the information and the disclosures. They literally call and say, I want to invest $100,000, $200,000 with you. What do I need to do? And I'm like, whoa, slow down. We need to go through these processes first. I want to make sure that you're qualified and that that you understand what you're investing in before we do that. So let me get you the packet, and then you can review that. We'll go through your questions. So it really is simple to close people that were referred to you. What do you say about that?
Yeah, I agree. I mean, we almost need to slow them down and back them up. And even if, the person who referred them to us went through the process and how it all works, we still want to make sure that they're hearing it from our mouths and that we're going through the same process just to make sure that, we're crossing our T's and dotting our I's, and everybody's going to be on the same page with how it works and what moving forward looks like.
Yeah, and as for our listeners, being a real estate investor, I obviously have a background doing that. That's how I got started all those years ago. I would get referrals from other investors, and I'd get referrals from other motivated sellers like, hey, my neighbor's going into foreclosure and he doesn't know what to do. Can you help him? And I'd buy those houses. So I mean, referrals is a tremendous way to build your business. So you should ask for them. Next, people who are already private lenders. Now, I say this because if they're already a private lender, you understand the private lending business. So it's not really a sales process. They already get it and they want to do it. So they're going to do their own diligence. They might set their own rates and fees and points and all that, but they're much easier to close than someone that doesn't understand it. And then finally, just people who understand real estate investing in general. If you're out there networking at the real estate investor clubs or the groups or whatever it is, and people that understand real estate investing, real estate agents, for example, are a great way to go. They understand that I'm making this loan for 200 grand, but I have this collateral here that's solid, real. If something goes wrong, I know I can get my money back. They understand that, and so that makes it easier to sell them on your idea. All right, so 3 ways to raise private money. The first and best way is your elevator pitch. Remember, Justin, I mentioned that advertising is a big no-no in this industry. So you have to go after people that you already know or people that you're meeting, and you got to build a relationship with them before you actually make the offer to invest in your deal. So your elevator pitch really is your most potent weapon, I guess you could say. It's going to be what raises you the most money, would be my guess. And an elevator pitch, if you don't know, is a real quick way to tell somebody what you do, right? And they say it's an elevator because you should be able to get your message. If you're in the elevator with someone, you should be able to get your message to them by the time you hit whatever floor you're getting off on. So it has to be real quick and precise. We have an investor that invests with Pine that has about $17 million with us. He's by far our largest investor, and we've done a tremendous amount of business with him. And he's helped us grow a lot. You know exactly who I'm talking about, Justin. He's the landlord for the office that we lease from.
Yep.
And I think you know the story, how I met him and how I closed him.
I do, but I want to hear it again.
Yeah, so it was a pretty funny story. It was way back in 2009. And back then, Pine Financial was just getting started. I started the company in 2008. And the way the company started was I would bring in a loan. Let's say, hey, I got this fix and flip for $100,000. And I need to go out and find somebody with $100,000 so that I can have him loan my client the money. And then I would charge fees and then I would service the loan. So it was really just brokering the loan. I was basically introducing a borrower and an investor together, and I was profiting from that. And we had a whiteboard at the time in our office, and there was just 3 of us at the time, Travis, Kim, and myself. And we had the whiteboard up, and we'd have all of our loans listed. These are all of our loans that we have to fund, and it has a closing date. So we know exactly when closings and our deadlines are. We still use that process today. We still have the whiteboard in the office now. And we were really busy at this specific time back in 2009, and we had a lot of loans on there. It was a little over $1 million in loans. And we're scrambling to raise this money, calling everybody we know, say we have great deals. And it's just really hard working the phones, working our network, trying to bring in this money. And it was a really stressful time back when we were getting started because we'd have lots of deals and not a lot of money. Or sometimes it was vice versa, lots of money and not lots of deals. And either way, it creates pressure. But definitely in the beginning, we did not have a lot of money. 5-6 million was all we were doing back then. And I went to go use the restroom after making however many calls it was trying to bring in this money. And I go up to the urinal and there's Ed. Or actually, he wasn't there yet. I was using the urinal. Ed comes in after me, right up next to me. And I'm the kind of guy, Justin, and when I'm using the restroom, I just kind of want to be left alone. It's just my little space there. And I don't want to have a conversation with anybody, but that was not Ed's preference. So he's starting to have a conversation with me as we're both there doing business. And one of the most beautiful questions you can get in sales is, what do you do, right? Because that gives you the opportunity to go into your elevator pitch. But he asked me, he says, so how's it going? I was like, oh, things are fantastic. I was totally stressed out. Things are great. Well, he's not used to hearing someone be so excited. She was like, really? I was like, yeah, business is fantastic. And I'm trying to get him to ask me, what is it you do again? Which is exactly what he did. He's like, oh man, remind me what it is you guys do. And we were new to the building, right? Because we're a brand new company. And I'm like, oh, we help investors earn high profits, loaning money against real estate. This is before I really understood elevator pitch, so I did it all wrong probably. And he's like, really? And I was like, yeah, we could pay you whatever it was. We could pay you this amount. You know anybody that'd be interested? And he was really interested. So him and I walk back down the hall after we finish up in the restroom, walk into our office where there's Kim and Travis sitting there. And he's like, well, show me what you got. And I showed him the board and I said, well, we have all these loans we're trying to find investors for. And he says, yeah, I could do that. And then Travis looks at me. I look at Travis. I look over at Ed and I'm like, which one do you want? He's all, I'll take them all. I look at Travis. I look at Ed. You want all of those? He says, yeah, I'll take them all. Just like that, it was 1.1, 1.2 million, something like that. We raised using this elevator pitch. And then it expanded into a $17 million relationship. And so that is how powerful this is. What you want to do is get somebody to ask you what it is you do for a living. And Justin, you go to a ton of networking events. That's like your thing. You're up teaching and you're up doing classes and you're at all of the events in town. How many people, when you go up and shake their hand and start talking to them, ask you what it is you do?
Almost all of them, unless I'm standing in front of a sign that says that we're hard money lenders. Almost all of them ask.
Almost everybody asks you what you do at a professional networking event. They will ask you. You need to be ready to respond. So this is an example of an elevator pitch to raise private money if that's what you're trying to do. I put together lucrative real estate deals so my partners make safe, consistent profits. That's pretty simple, isn't it?
Yeah. One sentence.
One sentence. A good elevator pitch has three things. The first one is you want in your elevator pitch, you want to build credibility. So we're going to improve on that one sentence elevator pitch that I just showed you here. So credibility, these are some examples of ways to build credibility. How much time have you been in business? What's the number of people you've helped? Or what do you do for your clients? Second, you got to build their interest. You want them, like Ed was in the restroom, very interested in what you're doing. And it's not about I or we, it's about you. What can you do for them? How can you, what's that famous, the most popular radio station? Do you know that, Justin?
Not sure which one.
What is it? WIIFM. You heard of it?
I have heard of that.
Yeah, WIIFM. What's in it for me? That's all anyone cares about. I'm listening to the CD in my car right now about negotiation, and he says as soon as you use the word "I," it's going to set off a fight or flight reaction to whoever you're negotiating with. So you really want to focus on how you can help them to get them interested in you, and then finally the call to action. What is it you want them to do? So here's a much better elevator pitch, not as simple, but if you can get 3 or 4 sentences together that sound something like this, or heck, maybe you use this one, and then you're out there networking, this is a good way to raise the money. So for the last several years, you can see that's how you build your credibility immediately. I have been helping people like you by providing secure investments with high returns. You think somebody would be interested?
Yeah.
I do this by using private money to buy, fix, and resell real estate. Okay, who do you know that might be looking for other investment options? That's your call to action. Who do you know? It's not do you want to. It makes them think about who in their network can they introduce you to. I kind of feel like I should leave this up here for a second so everyone can write this one down. This is pretty important. When I was doing this presentation recently, it was a lot of fun. We had it was a live event, and we had everyone stand up and start practicing with their neighbors, and people got a lot out of that. I would definitely say rehearse your elevator pitch before you go to the networking event, so that you're real fluid and confident. Okay, number 1, elevator pitch. Number 2, seminars. And this is the elevator pitch has definitely raised me the most money of anything I've done. But seminars was a close second. I've done really, really well with this. And I mean, I think that's evidenced by Pine Financial and our business model. It all started with, education and providing value to our clients. But when you're doing a seminar or a class, you're in front of the room. You have everyone's attention. You're the one that's credible. People want to do business with you, not because you're qualified. They just assume that because you're the one in front of the room. The hard part now when you're doing seminars is to fill up that room. I remember back when I think this was even before I started Pine Financial. This might have been 2007 when I was still with Susan. And I was doing seminars to go out and raise some money. And I teamed up with this real estate agent. Dennis was his name. And we did a class up in Westminster in Colorado. That's a northern suburb. And we didn't network. We marketed it to our networks. We marketed it as much as we can. We did like advertising online and Craigslist ads and all this. And we were just both pretty fresh at this, and neither one of us had great databases. So we're just trying to work together and build as a team. And we go out to this seminar. We set up and everything, and I think it was like a 6 p.m. event or something. And here it is, 5:55, and no one is in the room. We are the only 2 people in that room ready to give a seminar. And if anyone's done seminars or used seminars to help build their business, you might be able to relate to this. Nobody showed up. So then we start looking at each other and talking and realizing that, you know what? We might have just one person show up to this thing. And there's not much worse than that, right? So we didn't want that. What we ended up doing was closing everything up and just leaving because we didn't want just one person to show up to this.
You just shut it down, huh?
Well, I mean, I think we would lose a lot of credibility if only 1 or 2 people showed up. So we just maybe we'll just leave, and if someone does show up, they'll think they made a mistake or something. But that's a funny story, but I mean, it's true. And the thing about that is it was very humbling, and it made me realize how difficult the seminars is. Very, very effective, but challenging. So I want to talk a little bit about how to fill up the room, put butts in the seats, as they say. So the first thing is to build your database and always be marketing and adding value to your database. Aside from my staff and my people, you, Justin, and Travis and Kim and Charlotte and Sean. Aside from the team, there's nothing more valuable with Pine Financial than its database. That's the most valuable piece aside from the team. Now, I think that's true with any service company. And I hear about service companies transacting, like people buying and selling these businesses. And it's confusing because you can go out and start a service company with very little money, right? But the reason people buy a company, a real estate office, for example, is because of the database. That's what they're buying. So I would strongly encourage anybody in business to massage your database, work at it, and make it nice and comfortable, I guess. I taught you early on, Justin, when you go to networking events, the purpose of the networking event isn't to hand out as many cards as you can, right? I think a lot of people go with that in mind and just start handing out cards to people. That's the wrong way to network. The best way to do it is to collect as many cards as you can. If you don't ask me for a business card, you're not going to get one. I don't just hand those out. If you ask me, I'll definitely give you one. But it's not my goal to throw a card in your face. But I will ask you for yours every time. And then I'm going to put that card into your contact information into my database. And then you're going to start getting contacted by me. You're going to get invites to webinars like this. You're going to get contacted with articles that we wrote or tidbits of information about real estate investing. And we're starting to do a lot of videos now. So you're going to get notified every Friday when we put out our video. I'm not selling anything. I'm adding value over and over and over. And our database is strong. I think you would agree. People like us because we're always adding value. And now when we send out an email that we're going to do a seminar, people show up. Our last one in Denver, how many people did we have at the Success Summit in Denver?
Gosh, what do we have? 350 people or so?
350, something like that for a one-day event. And we've had over 400 at some of those. And it's all local. It's not like this national thing. And we do the same thing out in Minnesota. And it's not as big, but we're getting 150 or 200 people there. Because people trust that when we say we're going to do add value at a seminar, they believe us, and we deliver. So the best way to start doing the seminars and adding that to your business is to build the database, add value, and invite your database. The second way is to team up with other people that have databases. We call it cross-pollination. So work with other people that are not competing. If you're a fix and flip investor, you might want to work with real estate agents that specialize in real estate investments, or you might want to work with a mortgage broker that can help finance people on their deals. And if like 2 or 3 of you all go in together to put on a beginning real estate investor seminar and you provide value on how to invest in real estate, you might be able to throw in your presentation, an easy way to invest in real estate is passively, just by loaning the money to other real estate investors. And then maybe they'll come up and ask you how to do that at the end of the seminar. And that's a fantastic way to get people into your funnel. Speaking engagements is another great way. There's lots of groups in town. Whatever town you're in, they're everywhere. Kiwanis is one that's coming to my mind right now. But these groups meet once a week or once a month, and they need speakers. They want speakers, and they don't charge you. They'll, as long as you let them know what you're doing and that you're interested in speaking for them, they'll invite you in to speak and give a presentation. If you get those speaking engagements, which again is fairly easy to do, you have to add value to the group and then invite them to your seminar. So that's a good way to get more people invited to your seminar. And I threw in here at the very end podcasts. We don't do this at all, and maybe we should. We're doing these webinars, which is very similar. But you could do there's lots of very successful people doing podcasts, and you can ask these people if they'll be willing to interview you on their podcast, and that could be a good way to get people into your database and get people into your seminars. You do a ton of classes, Justin. Do you have anything to add to this bit of the presentation?
Just don't be afraid to tell people what you do. Even if it's just in line at Starbucks, when you're out there and you're meeting people and you're bumping into people, feel free and have that very concise elevator pitch ready to go. And when you're standing in line at Starbucks, if the line's super long, start making small talk. Maybe they're going to ask you what you do, and then you can tell them exactly what you do, and maybe invite them to a seminar or add them to your database or whatever it is. There's always opportunities to be meeting people and just telling them who you are, what you do. Grab a business card or contact info and add them to that database.
Do you agree that the seminars is a good way to close private lenders or other people that might benefit from what you're offering?
Oh, it's been tremendous for us.
It's
Tremendous.
tremendous. It's huge. Okay, and the final way that we're going to talk about today to raise private money is to ask for referrals. Now, this sounds so simple, but remember I said the people that are referred to us, I can close them generally without even giving them the disclosure. They so want to do business with us that it's easy to close. So I would definitely focus on asking every single person in your network for a referral. And you could offer, now be very careful with this, I probably shouldn't even say it, but if you want to offer some incentive, maybe just say this. If you're going to offer incentive to bring in money for you, you might want to talk to your attorney about how to do that legally. Okay, because if you start paying commissions, then they need to be licensed to take a commission from you. But you can incent people to refer business to you. Okay, so now once you get these leads coming in, you got to go close them. Remember, I said that you need to build a relationship with them and you need to do business with people that you have a relationship with so that it's not considered general solicitation or advertising. That way you're not violating any rules. Okay, so there is no, I hear this all the time. You need to meet with someone X number of times before you technically have a relationship with them. None of that is true. There is no SEC guideline to what establishes a relationship with somebody. It's very much in the gray. Now, my securities attorney has told me several times that you have a relationship with somebody the second you qualify them. So if you are getting a investor questionnaire, like we talked about earlier, completed, once you have that completed, then you have a relationship. You know them intimately enough to do business with them in this capacity. So that I'll just share that with you. But you definitely are not going to close people the very first time you meet them. You want to get them to, you want to set up an appointment, meet them at a Starbucks or something, and have a conversation with them. And when you sit down with them, there's a 5-step process to get them to say yes. And we talk about this sometimes on our YouTube channel. If you're not subscribed, please subscribe. We would love that. We talk about the 5-step process. Now, this is going to be true with anything you're selling. So if you're going out meeting sellers trying to buy their houses, this is the process. If you're selling widgets, this is the process. If you're trying to close on private lenders, this is the process. And I use sometimes like a sports analogy. Like, let's say Michael Jordan, everybody knows who that is. And when he was playing basketball and he would get fouled and he'd go to the free throw line, he'd have this routine and he would do the same routine every single time he went to the free throw line. The reason he had that routine and the reason he did that every single time is because it works. You should have a routine when you're selling. The first step in this process is to make a friend. Again, people do business with people they know, like, and trust. It is essential that you build a friend here. Did that just show up there? Let me say, I'm going to say on this for just a second. I'm very much an introvert. It's hard for me to build a relationship with somebody when I first meet them, especially if I'm in a group of people. So I need tools to help me break through and build a rapport with somebody. And what worked very well for me is remembering the acronym FORM, FORM. And I've heard it, somebody else just told me another way to think of it. Instead of using the M, they changed the M to, I can't remember what it was now. But I'm going to go with FORM because that's how I learned it. FORM. The F stands for friends and family. The O stands for occupation. The R is for recreation. The M is for your message. The idea of FORM as an acronym is to go through friends and family, occupation, recreation, before you talk about your message, which is accepting their money. Okay, so what do you, tell me a little bit about your family. Do you have any kids? Oh, you're married? What do you and your wife like to do together? Tell me about your wife or your husband. Occupation, what do you do for a living? Obviously, that one always comes up. And then try to build little bridges of similarities between them, and that's how you build the rapport. And then go into your message, and you're going to continue to use form all the way through the whole process. And whenever you can, talk about something about them and their life. Very much open-ended questions. Get them talking about themselves. Look, aside from you telling somebody their own name, that's people love to hear their own name. So if you use their name in a conversation, they're going to love you. Aside from that, the only thing they want to hear is their own voice. People love talking about themselves. So if you can get them to do that, they will become very much interested in what you have to say. Okay, finally, get a commit. Or finally, we're on step 2 here. Why did I say that? Step 2, get a commitment. Now, you and I did a fun little video and just was released a month ago or a couple weeks ago, Justin, about the upfront commitment and trying to eliminate the maybes. And that's on our YouTube channel. Oh, sound like you're about to say something.
Nope, just listening away.
Okay, so yeses are great, right? Yeses are fantastic. Nos are good too, because it doesn't kill your time. Maybes is what's going to drive you crazy in sales. So you want to try to eliminate the maybes. Now, in this specific example here, where we're talking about raising money, a couple $100,000 from somebody, it's very, very common to get, well, let me think about it. Let's work together. And you need to build this over time, build the trust. So you're not going to eliminate the maybe, but you could try to at least reduce the number of maybes you get by getting a commitment. And the way you do that is simply sounds like this. Justin, we could role play like we did in that video if you'd like.
Yeah, great.
I would say something like, Justin, we're going to be talking today about investing in some real estate deals. We're doing a lot of cool stuff out there, and some of it's a little creative and maybe a little uncomfortable for investors, and I understand that. And if we go through an idea here today that you feel is like a horrible fit for you, you don't like it at all, are you okay telling me that it's not a good fit for you?
Yeah, I can tell you that.
Oh, fantastic. And I assume if I come up with a way that it'll help me grow my business, but it more importantly is a good fit for you and you're comfortable and secure with your investment and it's a good enough return, you're okay sharing that with me as well?
Yeah, absolutely.
Oh, fantastic. Well, as an investor and as a business person, I need to make a profit and make sure that you're okay with that. And my time is really important. Your time is really important. So I'm going to commit the same. I'm gonna tell you if what you're asking for or what works for you isn't going to work for me. I'll have to tell you that, and I'll also tell you if I think that it's going to be a fantastic fit. I'm really excited to work together. I think we're both going to make a lot of money together. I'll tell you that as well. And I'm going to commit, Justin, to do that here today. Can I expect the same courtesy in return?
Yes.
Oh, fantastic. So I just got him to say I'm going to say yes or no today. And the specific language there is, can I expect the same courtesy in return? Now, who's going to say no to that? You could reinforce this by saying, okay, Justin, so just to make sure I understand, you are going to commit today to telling me, yes, this is a fantastic fit, or no, it's not. And I'm going to commit today to telling you it's a fantastic fit, or no, it's not. Did I understand that correctly?
Yeah, that's correct. I think it's fair.
Okay. So if you want to take that extra step and just reinforce it, you can. Now, later in the conversation, when they say, well, I'm not sure this is going to work, whatever the excuse or objection is that makes them say maybe, you could refer back to this. Remember, Justin, we talked about we're going to commit yes or no today. So if you're telling me that it's a maybe, I'm just going to assume that you're not comfortable. And then that could help you get past a maybe, possibly. So step 3. Needs analysis in the financials. This is by far the most important step in the sales process. And I will go as far as saying that 75% of your time in the meeting, so if it's an hour, you should be on this step at least 45 minutes. Now that CD again that I'm listening to in my car right now is telling me Time is your friend in negotiation. The longer you can make the meeting last, the more likely it is you're going to do business together. So this step you can drag on and on and on as long as you possibly can. And then the longer this goes, the chances of you doing business increases. And so this is going to be basically like, what are you invested in now? Tell me a little bit more about your investments, what it is that you're looking for. You had a bad experience. Tell me about that. Walk me through the story. Like, tell me what happened and what mistakes were made, and get them to share everything with you. Money is an emotional for sure, and people will open up to you if you ask them and communicate with them. And frankly, you need to know exactly what it is that they need, what is important to them, what kind of returns they're looking for. You need to know all that before you can even make them an offer. So spend the time here and get to know them intimately. And then I keep saying finally. The next one is make your offer. And that's going to be pretty simple. I like to use what if offers. What if I'm able to, that way I'm not fully committing to anything when I'm making the offer, because if they say no, I can say, yeah, I'm not sure if I was able to do that, but what if this? And I can immediately come at another offer. So I like what ifs. What if I can allow you to invest in my deal? Let's say I'm going to buy it for 100. It needs 20,000 in work. What if I'm able to let you invest with me the full 120,000, and I'm able to pay you a 8 or 9 or 10% return? Is that something we should talk about? And that would be the offer. That's how that would sound. And they could say yes or no. If they say yes, and well, what about that works? And then now you're getting them to sell you on the deal. And then finally the close, right? When you're getting ready to end this, you say, now this sounds like a fantastic fit. Don't you agree?
Yes.
That's a perfect, an easy, simple close. This sounds like a really great win-win. Don't you agree?
Yes.
And then Justin, what happens after you, I mean, I like your answer there, by the way. Every time, right? What is common after you hit your close in a sales process?
Well, then you get them signed up.
You get them signed up, but assuming they say yes, that's accurate. But when you're in the sales process, the most common response after your close is going to be questions and objections, right?
Yep.
Yep. So they're going to say, well, what about this? What if? You've heard this, like, people can what if your deal to death. What if it to death? What if this happens? What if this happens? What if you die? What if the house burns down? What if the market crashes? What if Trump's elected again? Anything you could think of, people will what if it to death. A what if objection is a subconscious objection usually. And what I mean by that, Justin, is that everyone has a conscious and a subconscious mind. And I know sometimes I'll read books and listen to tapes that say it's an unconscious mind. That sounds weird. It's not really unconscious, it's subconscious. And that's the mind that's always working. It's very, very powerful. If you haven't studied subconscious mind, I would strongly encourage you to do that. But the subconscious mind is the one that actually makes the buying or investing decision in this case. And so we got to speak to that. We got to speak to the subconscious. What the subconscious mind is doing when they're asking what if questions is going through check boxes. They need to hit so many check boxes before it is comfortable with making the investing decision. So what we need to do is blow through these objections as quickly as possible, make them, all the check boxes are marked, and then move on. So it sounds like this. Give me an objection, and I'll walk through this.
What happens if you die, Kevin?
I understand. So you're concerned that your investment might be at risk if I die?
Yes.
Okay, assuming I could deal with that, is there anything else?
What if the market changes?
Oh, I understand. So you're worried that maybe the market changing could risk your investment.
Yep.
Okay, assuming I could deal with that, is there anything else? And so, we could just do this all day long, right? And so in the interest of time, I'll stop there at 2. But the first thing I do to handle the objection is the 2 most powerful words in sales, and that is, I understand. I mentioned fight or flight earlier, and everybody's got it. When you hit the close and the objections come, our investor is in the fight or flight. They call it the fight or flight syndrome. They're either putting their dukes up because they're ready to brawl with you, or they're ready to turn and haul ass. Neither one of them is good. So what you want to do is swing your chair around on their side of the table. Look, man, we're a team. We're working here together. The easiest way to do that is those two words, I understand. And that kind of calms them down. And then you repeat the question to them so that they understand you heard it. You're being serious about the objection. You want to handle it. And then you just blow it off, assuming I could deal with that. Is there anything else? And I want to draw out all the objections so I can get the subconscious to check all the boxes. Now, once we go through all of those objections, we got them all out on the table, then I'm going to go back to my close. I'm going to say, okay, this is a fantastic opportunity. This is a fantastic fit. Don't you agree? Now that sounds weird, right?
Yes.
Okay. It does sound weird. That sounds weird because I didn't answer any of your questions.
Right, exactly.
What happens then? They're going to ask questions again. Well, you didn't answer my damn question about if you die. Right? That's what's going to come up. At that point, it's no longer a subconscious objection. Now we're into the conscious mind. The conscious mind needs to have answers to this so it can it doesn't make the decision, but it confirms the decision that the subconscious makes. So it needs to have like legitimate answers. All the checkboxes for the subconscious are done. The subconscious wants to work with you. Now let's handle the real objections. And so it comes up again, and now we answer it. One strategy, there's lots of ways to do this. I like to handle objections with questions. But an easy way to do this, if you can remember it, is feel, felt, found. Feel, felt, found. I understand, Justin, exactly how you feel. Many of my clients have felt the same way. If I die, then their investment is at risk. But what we found is that you're really secure by the real estate. And if something happens to me, you're going to be the first one in line to get paid back. I understand exactly how you feel. Many of my clients have felt the same about the market crashing. But what we found is because I'm fixing and flipping this, it's going to be such a short-term deal. The market would have to decrease in value 30% over a 6-month period before your money is really at risk. You see, feel, felt, found. Now, I like to use questions and draw out what they're really worried about and see if I can get them to talk themselves into handling their own objection. Once all the objections are handled, you go back to your close again, and then away you go. We're running short on time here, aren't we?
Yeah, we're cutting it close to the hour, but I think we can definitely go over a few extra minutes. I mean, you're doing such a great job and giving such great scripts. I mean, I can only hope. I mean, granted, it's on YouTube, so people can rewatch it, but definitely be writing down what Kevin's saying word for word. These are tried and true scripts that have worked and have allowed Kevin to raise $75 million. So definitely be writing this down word for word and practice this.
All right, I'll try to cruise through these last few slides here so we can try to stay as closely on time as possible. But after your appointment, unless you have a deal right there and ready to go, that would be ideal, but it's not necessarily going to work out that way. You're going to want to stay in contact with them. So the follow-up is by far the most important. Our investors that are potentially going to work with us, they're going to hear from me once a week, once every 2 weeks until they tell me to stop, and then they might hear from me one more time. I think it's very important just to drop a quick phone call, quick email, follow up. And then at the meeting itself, I'm going to leave my potential investors with a handout. And people are typically visual. So if you can include photos of deals you've done or anything that could add some credibility, maybe deals that people you know have done that you can say are helping you, mentoring you, it would be great. And then testimonials from anybody you can are tremendous in building credibility. The paperwork, a typical one investor to year fix and flip deal is going to look like this. There's going to be a promissory note, a mortgage or a deed of trust. I had mortgage on here because I did this presentation out in Minnesota last. But if you're in Colorado or any deed of trust state, it'll be a deed of trust. A title policy, this is going to ensure that your investors getting the first senior lien position and that you own the property. You want a hazard insurance policy. Again, disclose. Not only do you disclose, but you want to prove that you disclose. So you want them to sign, hey, these are some of the risks. This is the deal. This is what I'm buying it for. This is what I think I might sell it for. This is what it's going to cost me to rehab it. Put all of that down, have them sign it. And then you can get these docs, at least the promissory note and mortgage. You can get them at the Freddie Mac website. Maybe we could put a link into the comments below so you can just click on it. I'm not sure how that works exactly, but if we're unsuccessful putting a link, you can just type this in freddiemac.com/uniform, and it'll take you right to the page. You can get these documents for free. The title policy and all that. The title policy comes from the title insurance company. The hazard policy comes for your insurance agent. And then you'll have to create your own disclosures, whatever it is you want to disclose. Finally, the hard money. Justin, you know this very well because you loan out so much of our money. Many of our clients raise private money on their own, and we're totally okay with that, which is why we're going through this webinar and showing people how to do it. Hard money isn't a tool for everybody, and it's not a tool for every situation. It's just one tool in the tool bag. And I got to tell you that a lot of our investors our fix and flip investors, our borrower clients, have access to private money, but they use hard money to supplement their business. Hard money, as I described earlier, is 100% private capital. So this is you raising private money. You're just raising it from someone that's experienced in the business. So when you borrow hard money, you are borrowing private money. It's not just for non-qualified borrowers. Many of our clients are fully qualified, high credit scores, liquid reserves, income, all of that. Now, it's not just for non-qualified borrowers, but we work a lot with non-qualified borrowers, people with some credit challenges or people without income. A lot of fix and flip investors or real estate professionals write everything off on their tax return, so it's hard for them to show income. That does not prevent you from working with hard money lenders. Hard money is a great way to get experience and confidence. Remember, I said, for me personally, I wanted the experience and I wanted to show a track record before I approached my sphere of influence. If that's you, hard money is a great way to get a flip or two flips under your belt, build up your portfolio that you could show as for the handout with pictures and all of that. Build up your confidence so that you can go out and raise more private money. It's definitely cheaper than partners if you're doing quality deals. Now, if you're doing crappy deals, it's probably cheaper to get a partner because you're not splitting as much money. But many people will say, well, I want to bring in a partner and give them half of it because it's cheaper. And then if you actually do the math, partners are very expensive. So we're going to charge you, a fee up front and then an interest rate, but we're not taking any of your profit, any percent of your profit. Very little risk. Pine Financial loans 100% of your deal, all of the purchase, all of the rehab, all the closing costs, up to 70% of the value. If you don't have a lot of money into the deal, you're really shifting the risk over to the hard money lender. So this is a great way to shift risk. And if something goes wrong, we'll just take the house back. Either you can give it to us back voluntarily or we'll foreclose, but it's not going to create an issue for you on Thanksgiving. Finally, I promised a gift to everybody that stayed till the very end. We're going to offer this free special report. Now, anybody can get this free report. You just go to pinefinancialgroup.com. And I don't know, this is 12, 13 pages maybe. I really don't know. It's a pretty in-depth process of how you could buy rental properties with no money down, that cash flow with equity and all of that. And hard money is a big piece of doing that. You've done this, Justin. I've done this. Travis has done it. Many of our clients have bought and are continuing to buy rental property using hard money and getting into low or no money down deals. So that's all I got. Do you have anything else you want to share?
No, that's about it. I mean, if you've made it this far, I obviously you've gotten a lot of value. Kevin brings so much knowledge and experience, and we're continuing to deliver that level of knowledge and experience every single week on our YouTube page. So please subscribe to the YouTube page. Find us on Facebook. We're pretty easy to find over there. Give us a like over there as well. And at any time, if you want to chat about real estate, about hard money, about investing, about analyzing deals, we are always here to help. So please feel free and jump on our website, check out all the stuff we've got over there. Amazing articles going back years and years, and just pick up the phone and give us a call. Kevin is very accessible. I am very accessible, and we love talking to other real estate investors.
And again, because we couldn't do this live, that's my fault. I apologize for that. I will accept any questions through the comments below, and I'll personally get on there and answer any questions anyone's got about raising private money.
That's awesome. Well, Kevin, I really appreciate you giving this presentation to us. There's so much experience that went into this. It wasn't like you just read a book and then put this thing together. These are tried and true scripts that you went through and processes, a ton of useful information here. So I really appreciate your time. And again, please subscribe to the YouTube page and drop comments, whether you liked it, you got questions. We'd love to interact with you through the comments. So thank you everyone for coming to the webinar, and we'll catch you next month.